Hello traders, welcome back to another video on our channel. In this video, I've gathered insights from multiple sources to present two powerful price action strategies. Now, let's start by examining the market structure and key levels. But before we move forward, if this is something that interests you, as always, please give the like button a tap to support us in creating more content like this, and subscribe to our channel if you're new. See you right after the intro and disclaimer. If we analyze the current market situation, it's in an uptrend with a slight pullback, and we cannot predict what will happen next. On closer inspection, we can spot a minor resistance zone at this point. After some time, the price touches this minor resistance level, which then transforms into a major resistance level. At this major resistance, multiple candles react to the same area, showing that the price has failed to break past it. As a result, we realize that this could be a suitable point to consider taking a short trade position. In price action trading, traders closely watch how an asset's price behaves when approaching key resistance levels. These levels act like obstacles the price has recently struggled to cross. When the price nears one of these barriers, traders often perceive it as expensive at that stage. This perception can make potential buyers hesitate, reducing buying activity. Such conditions can cause the price to either consolidate around the same area for a period or reverse direction and move the opposite way. In a downtrend, if we assess the current market situation, it remains in a downward move with a slight upward retracement, and we cannot be certain what the market will do next. Looking here, we can draw a minor support zone at this point. After some time, when the price reaches this minor support level, it transforms into a major support level. At this major support, we notice multiple candles reacting to the same area, indicating that the price has attracted strong buying interest and has been prevented from falling further. At this stage, we recognize that this could be a potential point to consider taking a long trade position. In the price action approach, traders carefully observe how an asset's price behaves when it reaches significant support levels. These levels serve as strong buying zones that have recently stopped the price from declining further. When the price approaches one of these supports, traders view it as a favorable buying opportunity. This perception can encourage potential buyers to enter the market, increasing the likelihood of the asset's price rising from that point. Such a scenario may cause the price to either stabilize for some time or reverse direction and move upward. Let's examine another strategy that focuses on false breaks during market trends. We'll try to understand it step by step. Imagine the market is in an uptrend, creating higher highs and higher lows as it progresses. Then, it retraces to a support level and breaks it, but after a while, the price climbs back above this level. In such a setup, we can take a trade in line with the prevailing trend. Our stop loss will be placed around this level, and our target will be set somewhere in this area. Now, let's understand why we decided to book profits here instead of aiming higher. First, this point represents our target structure. Secondly, there are instances where the price reaches this level and then reverses, moving back down from there. Let's go through some examples. In this case, the market is in an uptrend, and we have our previous resistance, which can now act as support. The price moves toward this level and breaks it, but after some time, it climbs back above this level. This indicates a false break setup. On the next candle, we can enter the trade here, placing our stop loss right at this point. We can also secure profits at another resistance zone in line with our risk management plan. When the price fails to continue downward after breaking the support, it signals reduced selling pressure. If the price closes above the support level with a green candle, it shows buying activity aiming to push the price higher. Additionally, this places us within a long-term upward trend. Let's look at another example. Here, the market is in a downtrend, and we have a key level that can serve as resistance. The price moves toward this level and breaks it, but within the next few sessions, it falls back below this level, indicating a false break setup. At the opening of the next candle, we can enter a short trade and place our stop loss here. Profits can be booked somewhere around this point. Alright, those are our two strategies. Thank you for watching. I hope you found some value in this video. If you did, please give it a thumbs up and consider subscribing to our channel for more trading strategies and insights. Also, feel free to drop a comment if you have any questions. We'll do our best to respond to all of them. See you in the next episode.